international markets continue to decline, Donald Trump is threatening to impose an additional 50% tariff on Chinese goods imported into the U.S. unless it removes the 34% counter tariff. Following Trump's decision last week to impose a 34% tariff on Chinese goods as part of its Liberation Day that imposed a minimum of 10% levy on almost all of America's trading partners, Beijing responded on Sunday. China's Commerce Ministry has declared that it resolutely opposes the prospect of higher tariffs from U.S. President Donald Trump and promises to take action to protect its interests and rights. Now, according to a translation of the statement communicated, and I quote, "The U.S.'s threat to escalate tariffs on China is a huge mistake. It will never be accepted in China. Now, China will battle to the end if the United States insists on getting its way," end of quote. Now, for more on the story, we were joined earlier today by Oreoluwa Odetunde, who is head of research at Anchoria Asset Management. Let's have a look.
So I think it's pretty difficult to state as of now who is definitely going to blink. And I mean, if we definitely look at why we're seeing these reactions from the US and is looking to place these reciprocal tariffs, we're seeing a situation where he wants a level playing field with other trading partners. So when you look at the global trade system that is currently being implemented, in the worldwide, you'd see that it was one we used post World War II. And, it's some way, it's outdated in some way. And when we had, post World War II, we just had one healthy economy, which was the US, and it was kind of designed to boost recovery of a lot of economies as of then. But now we are having an uprise of very powerful, very strong economies. And, all of that, put into factors, we're definitely seeing a situation where the US is just trying to find a level playing field and is now introducing a notion of reciprocal tariffs. We know that it's beneficial to them because, if you look at importations related to GDP, is about 14% of, importation expenditure is about 14% of total GDP. So if definitely they're able to reduce expenditure on importation, it will continue to boost GDP and, definitely protect the local industries in the US economy. And I think as of now, China is not necessarily looking to make any negotiations with the US. I think it doesn't really care about the bilateral relations that it has with the US. I think it's focused on other bilateral trading partners, other European counterparts. I think there's definitely been a lot of conversations around, the Chinese exports being, there's just been a lot of hostility towards Chinese exports. The fact that it has turned some countries into a dumping ground, or the fact that it has crowded out some local industries that we've seen in some other European countries, as well as some African counterparts as well. So definitely, I don't think China considers its relationship with US as a big concern. I think the concern is majorly tilted towards other trading partners, not necessarily the US at this point.
Right, so quite a number of moving parts there. As you rightly, pointed out, there's been quite, some hostility over time towards China. Now, the EU says it prefers negotiations, but then proposes the first tariffs on US imports. What do you make of the different approaches from China and Europe?
I think it just takes me back to what I had said. Yeah. It doesn't necessarily concern itself with, relations it's currently having with the US economy. I think it's just majorly looking at, the Chinese economy is just majorly looking at its relations with other trading partners. It's just majorly looking to ramp up Chinese exportations. We know that, the Chinese economy has somewhat been struggling for a while now. Growth has been below 5%. COVID had happened in the economy. There's been a property market slump that had also happened, has definitely affected economic growth. So it's definitely been trying to depend a lot more on exportations to other economies. That's, for China. So and we know that it has definitely reduced its exposure to the US, especially when tariffs were placed in 2018 period. As of then, I think tariffs, the trade deficit between the US was around $418 billion. Well, I think that figure has somewhat shrunk to around $296 billion. And I know that Trump had made a lot of claims about the figure being over $1 trillion. We know that that's not necessarily true. I think definitely we are seeing a situation where the Chinese economy is just more concerned about its relations to other trading partners, not necessarily the US.
All right, certainly very interesting times, we all have to say. But now, in light of continuous volatility we've seen, quite a number of Wall Street titans, speak up, the like of Bill Ackman, Larry Fink, Jamie Dimon, but Trump doesn't seem to be listening.
Yes.
What will it take? Do you think we need more business people to speak up, or it doesn't matter, it's neither here nor there?
Not necessarily, because we know that Trump is a very strong-minded person in the first place. And I mean, definitely some of these guys that you mentioned, Bill Ackman, for instance, and Jamie Dimon, to some extent, they somewhat supported some of the policies he had started to introduce before he was elected as president. But I mean, definitely this pushback from them just definitely says that they're a bit concerned about the status of the economy. There's recession fears now and all of those things. And I think there's definitely a concern that political capital is just used now to push just one major package, which is the tariffs. We have other things he had mentioned he wanted to implement in his agenda. He had said he wanted to lower taxes. He had said he wanted to reduce the regulations in the financial services sector. So I think they're just concerned that he wouldn't have enough political capital to do all of those other things he intended to do, like, the taxes as well as the lesser regulations. So there's just a bit of concern. I don't think, I think what he would, the pushback from him would be that, negotiations are somewhat happening. I think we're hearing that about 70 countries are looking to negotiate with the U.S. economy as of now. I think he had said that it won't put Japan in the front center of most of these things. So, I mean, if definitely some of these negotiations are happening, I think that is what is going to be his own thoughts on trying to calm these business leaders down.
All right, but speaking of these concerns that you allude to, would you say they are legitimate concerns?
Yes, they are definitely legitimate concerns. I think definitely we're seeing a situation where, inflation would definitely be affected. There might be slowing GDP growth as well. And, like now, we're seeing that there's more focus on the consumers and business sentiment, especially when, the Fed is tracking some of the data he uses to make some of his decisions at his meetings. So that sentiment is very negative. But, I think we've heard from the Fed that they're just still trying to be very cautious about, any rate cuts that's meant to happen. So I think it's something that definitely they are considering, the Fed is considering, the fiscal administration is considering, but I think the fiscal administration is looking at it from, a short-term perspective. They feel like the impact of some of these tariffs will be a bit more short-term.
All right. Well, speaking of that, let's look at the wider multiplier effect in terms of the impacts for Nigeria locally. What could we expect?
So, I mean, when you look at our foreign trade statistics data, you would see that, our share of imports, share of exports is just about 6 to 7%. It's not so much. We're not so overly exposed to the U.S. economy. But I think the major issue is now, I think we would see more indirect effects on the Nigerian economy. I think in places where imported inflation is expected to spike. I mean, if you see some of all these tariffs being implemented, it's expected to have pass-through effect on our inflation. And we know that, being a very import-dependent economy, there will be a pass-through effect of imported inflation. We're also seeing that this has been affecting, oil price volatility as well. We had seen that, Brent had come down to around $65 per barrel levels. And, compared to where we have this current administration benchmarking oil price at $75 per barrel, it might mean that, there should be future losses of oil revenue to the Nigerian economy. So it definitely doesn't bode well for the Nigerian economy. And we know that, when you look at the budget, we know about 60% of the budget revenue is expected to come from oil revenues. Yeah. So I think there's a major problem for the Nigerian economy.
But I mean, if we look at the Central Bank of Nigeria sold, over $300 million, yet the exchange rate closed at, 1,629 naira to the dollar. Could this be prolonged?
Yes, it is very possible. And you know that investors don't like worry. They don't like uncertainty. And, it doesn't necessarily bode well for us at this particular time, especially when sentiments just started improving the Nigerian economy. They published the data around our net FX reserves as of last week, about $23 billion. And we're seeing a report by JP Morgan also saying it was rolling over some of its OMO bills into treasury bills, staying longer in the Nigerian market per se. So it definitely doesn't bode well for us at this particular point. We might start to see, some weakening. We might continue to see some weakening in the Naira. I think they will continue to use their arsenals to try to support the Naira, but there's only so much that they can do as well. Foreign investors, they tend to be very aggressive. I remember in 2020 when we saw a lot of capital flight flight from the Nigerian economy. We had seen that, there were some measures that were put in place to more or less, stem that capital flight. But I think at this point in time, they cannot stem those capital flights anymore. They have to find a way to supply those FX to foreign investors who are looking to exit the market, to make sure that there's confidence in the Nigerian economy. There's easily accessibility to the Nigerian economy. So if they're able to supply those FX to, foreign investors who are taking out their funds, it means that when, when some of these things settle, conversations around tariffs and, all of that, they might likely be able to come back into the economy. But as of now, I don't think it bodes well for us. I think we might continue to see continuous weakening in the naira.
Oh, you reckon? For quite a bit?
Yes, just a bit, yes.
All right. Well, let's hope it's, the time is measured, literally, just so that we have a better understanding. I mean, let's go back to the source. The Trump administration has listed what it terms, unfair trade practices by other countries. But when we look at this in a more granular fashion, don't you think that this is a little bit more defeatist for local industries from a protectionist perspective?
Yes, it definitely is. I think it definitely is. I think there's just been a major issue, especially, when we see the kind of, rates, the tariffs rates that's being applied to, a lot of these economies. So I think, when they spoke about those tariff rates and why they are so high. It mentioned that they are not just considering the tariff rates. I mean, the U.S. they're not just considering tariff rates. They are considering non-tariff regulations as well. They are looking at things like legal restrictions. They are looking at things like quotas and all of those things. So it's all of those things combined that made that effective rate that high. So it definitely does affect these local industries. But I think for the case of Nigeria, I think the easier or the sooner we can get into negotiations with the U.S. economy, the better for us. I don't think we'll have a lot of arsenals to majorly support ourselves. Like we know we're very import dependent as an economy. So the faster we can get into a negotiation with the U.S. economy, the better for us, and the better we can, in a way, find a way to protect our local industries. We already know that interest rate has been high for the last 2 years in the Nigerian economy. So I mean, that has already stifled growth and growth of a lot of local industries in the economy as well. So I think this adds more pressure to it. So I think a negotiation should be a way forward for the government at this point with the U.S. economy.